Hello, my name is Kevin Hollifield, and I would like to welcome you to the exciting story of the accounting equation. I believe that this is a very important topic because it really is the basis of all accounting. The accounting equation measures the resources of the business and its claims on those resources from internal and external parties. The accounting equation is made up of three parts. First, it's made up of assets, which are the economic resources that are expected to benefit the business in the future. These are something that the business owns or has control of. Next are liabilities. These are debts that are owed to creditors or lenders, most likely a bank that business had borrowed money from. And finally, equity. Equity is the owner's claims to the assets of the business. It's important that the relationship of these three parts always stay in balance. All businesses strive for net profitability, so this concept can be used in decision making to ensure that the right balance of revenues versus expenses are achieved. When looking at this from a biblical standpoint, I chose to look at the book of Luke, chapter 14, which was mentioned in the learning module, and it reads, "Suppose one of you wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it? For if you lay the foundation and are not able to finish it, everyone who sees it will ridicule you, saying, 'This person began to build and wasn't able to finish.'" I think the real point that they're trying to make here is to build the plan the build, and stick to it. And that's how you are able to be successful. And I think that applies pretty closely in finance as well. This concept can be applied to all different levels of business. Outlined here, I have entry, mid, and executive level positions. So as an entry level professional, this accounting equation is a fairly basic concept, so understanding it as in your entry level will contribute to future growth, even if at that time you're not necessarily responsible for maintaining that equation in your company. Moving on, as a mid-level professional, you're more than likely in some sort of management position, and you're responsible for maintaining a business line and a source of revenue for your company. So knowing how to utilize this concept will be critical for understanding how to build and maintain a budget. And then as an executive level professional, you're going to be very dialed into this concept because it will determine the overall success of the company. And at that point, you have a vested interest in having a successful company. So it would be an executive's job to oversee or maintain that accounting equation in order to keep all of those aforementioned balances in check. An ethical issue that I think can occur and has occurred around this topic is in relation to poor financial performance. So if a company has a line of credit through an outside financial institution, more than likely they have borrowed money or got a line of credit through a bank. When it's time for them to turn in their statements at the end of the year, they could falsify numbers by inflating their bottom line with assets that they don't really have. So this isn't actually a fix to any problem. It's just covering it up to avoid penalty or consequence, and it's not actually going to fix the problem of what's most likely a failing business. What this actually should be is an opportunity to evaluate what's failing and what's off, and turn it into an ethical solution, which is an easy ethical solution, in my opinion, is to find a way to responsibly reduce your overhead, which even if your cash coming in stays the same and you drop your overhead, you're going to have a higher net profit in your business. I use the book and the Bible for this exciting story of the accounting equation, and I would like to thank you for listening.